Hello and welcome back to the Pips O'Clock weekly market analysis for the 10th to the 14th of February. And in this analysis, we are going to be focusing on three asset classes: gold, GBPUSD, and EURUSD. And we are considering the trend and the key levels, and then possible entry levels for the week. So for gold, we can see that in the past week, being the first week of the month of February, considering the plethora of events that were released, gold still did fantastically well, recording a new all-time high. We posed that as a question if there was a possibility for gold to do that last week, and it turned out to actually do it. Well, contrary to what I thought, maybe there could be a a big pushback before it would go, goes back or we retraced and then found its way to make a new all-time high. And the big question again is it possible for gold to make yet another all-time high this week? So this analysis will give us an insight into what to expect. All right, so gold in the past week already is that's a continuation pattern we have there. So series of higher highs and higher lows. The precious metal has been experiencing a good bullish or bull run. So we have it bullish. So what we'll just be doing here now is to quickly look at the key levels to expect. So if we switch over here, you can see on the 4 hours time frame for gold, since it's the weekly analysis, everything is pointing up. And with what we've got here, this is a bearish engulfing on 4 hours, meaning there's a likelihood that gold might pull back. So the question is, where should you wait for it to make an entry into the market? So let's quickly consider some key levels and then some confluence of key levels. All right. So first, let me plot the Fibonacci retracement, and we'll run with the high of last week, the all-time high, to the low of the week before it, which is somewhere around here. And then we have 61.8% retracement here at 827.08, and then 50% at 2808.65. Okay, and that's also where you have the 50 period moving average. All right, now around there too, if we let's check the floor pivot points. So the floor pivot points for gold, we have the 2840. So 2840 rather is somewhere up here. 2840 is somewhere around here above the 68 or 62 retracement level. So I think that we may likely see gold coming somewhere around here, except we will maybe, okay, let me do something. Let's push this and see if we can use the low of last week to draw this. This is the low. So if we use that, so it means that somewhere around here, okay, if the bullish momentum continues, somewhere around here, we might see gold test 50% here at 2830 and push back up to make a new high. Okay, but then there's also a possibility that if it breaks all of this, then it may want to come down all the way to 2808, which is somewhere around 23.6%. So we may have to run with this. Okay, but I would recommend you trade this on 1 hour. So 1 hour on a day-to-day basis, so that you'll be able to catch the moves. Okay, so let's leave it like that. And then let me quickly switch to 1 hour and then see what we can see there. So you can actually trade on 1 hour and see the much you can grab, as price retraces and bounces back up. Okay, so let's switch over to the next instrument, which is GBPUSD. And so on the GBPUSD, what we've got here, the dark cloud cover that formed couldn't be sustained. So the bulls appear to be back. They appear to be back in the market. And what we have here now is a lower low and a higher high. However, it also formed this is like, what can we call this? All right, if we take it from downside, you may say it's an inverted hammer, but it can be because it's happening on the upside there. So it looks like a shooting star. So this is actually a bit dicey. So with this here, it could go either way. It could go either way. So what I would recommend we do here is to head on straight to this place. Let's quickly See, price will still attempt to make a new high here, right? But then you also want to seize the opportunity working with the key level. So let's quickly switch and check that for GBPUSD, and I prepared it here. The power point is 1.2399, and you have first support at 2249, first resistance at 1.2550. So let's go over here again and see. And I'm going to bring this over. So with this here now, this is pretty dicey, and I'll recommend you want to wait, because on 4 hours, let me see. Do you have the let me see, let me put this on one and weekly here and see what this holds. Everything here is still pointing down. When you look at this from the weekly perspective, everything is still pointing down. So you have to, what we will do here is to, I'm not plotting Fibonacci here. Rather, we will be looking at this RSI. Wait for the RSI to get to 30 before you think of buying. So meaning that we can still seize the opportunity of what is the price action here. So we pull back up here. So if price will rise, because where it is currently is at 1.2399, and also if you look at here 1.2399, that's where this is showing up. The weekly power point is showing up. So depending on where the market opens, so you may want to really watch that to see. Above the pivot point is a bullish bias, below it is a bearish bias, and then whichever side it happens, it can serve as support, it could serve as resistance. So you want to watch it to see. So if it's above it, then you want to watch price to rise to test up here, maybe to first level of resistance, and then find a price action to go down, because by then RSI may not have gotten to 30. So until it gets to 30 and cups, then you can now join for a bull run. But then outside of that, you have to follow this systematically. Don't be in a haste to take trades with GBPUSD. So for EURUSD, EURUSD is something similar that we have seen here too. But let's see. But in the case of EURUSD, is a higher low and a lower high. So this is still more bearish than bullish. So which is why the bias is still more strongly is still the bias still tilts towards a bearish market than a bullish market, in spite of whatever you are seeing on your chart. All right. So for EURUSD, let's quickly check here and see. RSI hasn't gotten to 30 yet, but it's bent here a bit. But then with what we're seeing here, we're still going to favor a selling pressure. So you want to also, if you look at this, let me disconnect this. Okay, so if you look at this, if I want to even pull in Fibonacci into this, look at what I may likely do. Let me even remove this. Where is it coming from? Okay, let me remove it. Okay, so let's have a cleaner chart. Okay, so if we pull the Fibo here, so I could still run it from here to here, and based on that, so see where price at. So if we see a pullback to this place, all right, let's look at the floor pivot points where it is for EURUSD, and it's 1.0326. And 1.02326, if you look at here, 1.0369. Okay, 50% retracement. So you are likely around here. This is a bearish bias that we are seeing here for euro. So you want to just watch and plot your Fibonacci retracement to really find good opportunities. But we can start looking at this 1.0326, all right, for a sell. And of course, heading downwards, you can actually watch out for support at 1.021, and above that is 1.0442. So you want to be watchful to see what you could do with that. All right, so at 38 points, 38 retracement, 30.2 retracement, that's where you have 1.04078, and you want to actually pay attention to that and see how far you can go with it. Okay, so I think we'll have to draw the curtains at this point, and I trust that you find information here useful and helpful to help you make positive and profitable trades. From all of us at the Crypto Clock Desk, we want to wish you a very fantastically profitable and impactful trading week. Thank you, and God bless you.